A wonderful afternoon to everybody. My name is Daniel, Partnership Manager from Google, and it is my pleasure today to deliver a warm welcome to all of you to our special Google event of the year, Scaling Your Business with Sustainable Funding and Profitability. As you know, 2020 has been a challenging year for most startups, even those with Series A, B, C, or even D funding. It is therefore crucial for startups to ensure sustainability during these times. And we, Google, understand the situation. And this is why we organized today's fireside chat for startup entrepreneurs to get the latest insight from our top venture capitals in the region. And don't forget that there is also a golden opportunities for you to ask questions and follow up after that with our VC speakers and also with Google to network and seek relevant opportunities to help you grow your businesses. Okay, without further ado, this is the agenda for today. Before we jump into our fireside chat, we have a surprise for you. This is the quiz, and you guys can stand a chance to win attractive prize from Google. After a quiz, we have Ms. Noparat Yokubon, our app developer sales lead, who will have an opening remark to share the latest trend to all of you. And then we have a fireside chat, also Q&A session follow after that. And finally, we will have a closing remark to sum up the session. So now, let's move on to our quiz. You can see on your right-hand side is the quiz. This is including 3 simple questions, and you can fill your answer directly on the slide. And also don't forget to leave your questions for the live Q&A below. Okay, so please start now. You have around 1 minute to answer the 3 simple questions, I guess. All right, and now I would like to introduce Ms. Noparat Yokubon, our app sales lead, who will have an opening remark.
Hi, thank you for spending your Thursday afternoon with us. My name is Noprat Yokubon. Our team works with apps and game developers across Southeast Asia, Australia, and New Zealand to help them reach their users and grow their business by providing app product and industry expertise. Before we get into our panel discussion for today, I'd like to go over a few contexts on the industry that you all are experiencing. We often hear the term mobile first, But most recently, our friend at App Annie came up with the term mobile forced. This is what we're seeing this year. The pandemic has accelerated mobile app downloads and time spent on apps. Within the first half of this year, the monthly downloads on App Store and Play has increased by 25% versus the prior 6 months, with over 64 billion downloads already happened in the first half of the year alone. As a result, we're seeing businesses getting onto apps to better engage with their users at an accelerated pace. Within Southeast Asia, actually on the users, we've also seen increased time spent on apps. The chart that you see on the right, that's the number of hours spent weekly. We've seen over 1.6 trillion hours spent on apps in the first half of the year. This is a 25% increase in weekly time spent versus the prior 6 months. And because of this, everyone is getting on the app game to better engage with their users. Getting closer to home, within Southeast Asia, we're observing similar trends. Bain recently released a research showing that Southeast Asian users are trying more apps since the pandemic. While entertainment, communication categories are seeing increased usage, services like e-commerce, food delivery, digital payments, and short videos are seeing a massive influx of new users. They have also found that these first-time app users have indicated that they intend to continue using these apps. What this translates into is the market is expanding, users form new expectations and new habits on app. Yet, when you look at, as a startup, users are moving, users are adapting apps. At the backdrop of all of this, we've also seen the WeWork effect. We started to see the shift from unicorns growing at all cost to more and more of the sustainable growth, survival, growing with profit-driven mindset versus growing at all cost, or the new breeds that we know as camels. So I think all of these are very interesting trends from the global trend, more time spent, more download on apps. Within Southeast Asia, business are accelerating, a lot of new users using app for the first time, forming new habit, expecting business to get onto apps and delight them. But as a startup, we know that getting funding is important in order to meet the user demand. But we also see the shift from growing at all costs to more sustainable growth. These are all very, very interesting trends that we're living and breathing today. So who else are better to help us understand and discuss about these trends than our friends and venture capitalists? And with that, I'd like to welcome our 5 esteemed panelists to the stage. Hi, so I have with me 5 panelists. It's such a rare opportunity to be able to welcome all of you today to help the startups in the region understand what to expect and try to digest all of these trends. So why don't we go to Olivier first to introduce himself and his venture capitalist. Olivier, over to you.
Thanks, Google, for having me, and especially thanks for supporting the startup ecosystem here in Southeast Asia. So just in 2 minutes, a few words about Phoebe Venture. So Phoebe is the acronym of For Entrepreneur by Entrepreneur. We are an early stage VC fund for Vietnam, Southeast Asia. The fund size is 25 million and the fund is registered in Singapore. So Phoebe is an entrepreneur-centric platform where both the 4 managing partners and the investors, the LPs, are all entrepreneurs. Just a few data points about us, the partners. So 2 of my partners, they started a conglomerate 30 years ago in Vietnam, and now they have around 20 companies and 6,000 employees. On my side, I worked several years at Google, YouTube, Microsoft. I also run my own startup and sold it. And I moved to the VC industry 9 years ago in Europe and Latin America. And the 4 of us, we created or we participated to the creation of 35 startups. We invested in 60 other startups and also invested our savings in 7 funds in Silicon Valley. And same thing for our LPs. Most of them are entrepreneurs, as I said, and high net worth individuals, family offices from Southeast Asia or US, and most of them are in tech, with some C-levels from Google, LinkedIn, or Netflix. And both ourselves, the partners and the LPs, trying to offer a more than money experience to the founders by sharing our mistakes, our learnings, offering our network, and try to be efficient in the due diligence to protect the time of the entrepreneur and also offer some fair terms. And finally, this year in 2020, we backed 7 great entrepreneurs and startups. 3 of them are in Vietnam, 2 in Singapore, 1 in Indonesia, 1 Philippines. 2 are in logistics, 2 are in fintech, 1 education, 1 prop tech. And we had the chance and the honor to invest with great co-investors. Like we've done 2 investments with Insignia, 1 with Golden Gate here, but 3 others with Sequoia Capital, 1 with SoftBank, and 2 with an American fund.
So it's all of your friends here today, and hopefully when we finish the session today, you can say that there are more that you're investing in Southeast Asia. Thank you, Olivia. Should we move over to Yiping?
Hey everyone, good to be here. My name is Yiping and partner of Quest Ventures. So Quest Ventures is an early stage fund. Specifically, we invest in the first check, seed, and Series A startup. Although recently we made an exception and did a Series B in Yummy Corp. So in our Fund 1 previously, we have invested in more than 51 companies, and currently we are on our Fund 2. And Fund 2 this year itself, 2020, we have deployed in 9 startups this COVID period. We're pretty active. We're doing about at least 1 deal a month. And our check sizes is anywhere from 500K to 2 million. We are a collaborator type VC. We like to work with folks. So many of the friends here, fellow VCs, are our friends that we co-invest in or invest after us. So we are of 3 partners, myself, James, and Jeff. 3 of us are all entrepreneurs and ex-corporate before. And we like to be able to help startups go through the journey with us as a fellow founder, as in the way we have walked the founder path before, but also in a way of understanding what it takes to work with fellow other corporates and what it takes to also exit a company. So very happy to be here. One of our, our Fund 1 is pretty well known to be a B2C company, to be a B2C strong type of portfolio. So we have invested as first check investors into 99.co, Carousel, Style Theory, Shopback, and equivalent. In this current Fund 2, we are sector agnostic. We do both B2C and B2B companies. Many people do not know that our current portfolio is now 30 to 40% B2Bs. So regional in terms of the Southeast Asia region, and happy to be here. Thanks.
Thank you, Yiping. Should we move over to Jeffrey? Tell us more about Golden Gate Ventures and yourself.
Hi everyone. So we started in 2011 as a seed fund. Now we are investing over 3 funds from now. So Fund 3 is about 100 million. We have done over 45 companies in Southeast Asia. Invested in Vietnam way back in 2012 and have been fairly active in the region. We have typically done seed and Series A anywhere from, I guess, 300K to 4 million US. And pretty agnostic, I would say. It's B2C, B2B2C, fintech. That's our sweet spot. SaaS is quite recent. SaaS and deep tech is a bit about 2.5 years ago. So we are happy to look at B2B as well. Although I can tell you, there are better funds that can help you there. The team is spread across 2 countries, Singapore and Jakarta. And we have both, I guess, an investment team and a portfolio management team. So we have people that specializes in growth, in recruiting, and in business development. So these are more specialists, full-time roles within the firm to help the companies either to expand or to kind of navigate their way in country. Yeah, that's pretty much it. Nothing much to say. Thank you.
Thank you. Thanks, Jeffrey. Samir, over to you.
Hey, hi guys. Very happy to be here. Thanks to Google for organizing this. So I'm a principal at Insignia Ventures. We are still seeing ourselves as the new kid on the block. We are 3 years old. We started in the summer of 2017. Our first fund was a $120 million vehicle, which we deployed over the past 3 years in about 50 startups across the region. So we are Singapore-based, but we invest, of course, in Singapore, but also in Indonesia, Thailand, Vietnam, Philippines, Malaysia. So really across the region. We started our second vehicle early this year in the middle of this crisis, this $200 million vehicle. And the strategy for that one is a bit different from the first one. We used to do a lot of seed or pre-A investments, and the check sizes at that time ranged, I guess, anywhere between 250K, 200K sometimes, all the way to 2 million. For this one, we are trying to make slightly larger checks, anywhere between 3 to 5 million. That's our sweet spot. We can and do invest sometimes earlier, depending on the founder, depending on the market, et cetera, et cetera. But yeah, so our sweet spot is slightly bigger and later stage now. We are sector agnostic. Just like my fellow VCs, Yiping and Jeffrey, our focus for the first fund was mostly consumer. We are trying to move towards doing B2B companies. So we are seeing more and more, and we're doing more and more SaaS B2B companies across the region. Although I must say that a lot of them are actually based in Singapore, but more than open to speak to founders elsewhere that are building similar products. And yeah, so what sets us apart, I guess, from the rest of the industry is that we consider ourselves, and we are in a journey to build a platform VC. So the first pillar of that platform is our technology team in-house. So we have close to now 10 engineers that help us and help our portfolio startups from problematics like architecture, like developing a new product, like scaling up their backend, et cetera, et cetera. So really on an ad hoc basis. And we also have a really strong base of operational LPs from startup all over the world that of course give a hand to our startups if and when needed. On my end, I'm a finance professional by background, started in banking, moved to private equity. I started a company as well, which I grew and sold. That was not in this region, but in the Middle East. I was an early employee founding team in another one. And then I've been in VC for the past 3 years now. And at Insignia, I do everything fintech and SaaS. That's it. Thank you again.
Thanks, Samir. Last but not least, we're saving the best for last. No, I'm joking. Why don't we move over to Donald? Tell us about MDI Ventures.
Hi, thank you, Nob. My name is Donald Wiharja. I am the CEO of MDI Ventures. The title CEO over here, not partner or anything, because MDI is a corporate venture capital of Telkom Indonesia. So unlike the usual venture capital, which we also do for capital gain and all that, we also have an additional requirement to build partnership with our startup and with Telkom subsidiaries and a bit more with the state-owned enterprise. So MDI Ventures originally founded in 2016 with our first fund of 100 million. Our fund is evergreen, so after we exit, we still invest money in. We have successfully deployed to 40 companies so far, done very successfully in returns and exits. But we also deliver almost $200 million in synergy revenue to Telkom and to our startup. It's a win-win situation. So it's a revenue for Telkom, but it's also a revenue for the startup. It's growth for the startup that we deliver through our partnership to Telkom subsidiaries. We actually have, as big as our investment team, we have a dedicated synergy team that built that bridge. The similar synergy team available in all Telkom subsidiaries. So it's a network of partner builders already built into our group. Yeah. So with that success, we are given this year an additional $500 million to deploy the next couple of years to continue to deliver not just with Telkom, but also the same thing with other state-owned enterprises. In fact, I'm actually heading the healthcare digitization task force with the Ministry of with the state-owned enterprise ministry. Right.
A lot of telemedicine happening in
it's so I do a lot of B2B, a lot of B2G work, and I have 11 other people in investment that's helping shift through all the startups. So get to do less to do what I would like to do, but hopefully it still helps the startups, right? So with this mandate, we focused on a later stage B+. Our hope is to invest less than 5 million first check, then follow up to 30 to 40 million in subsequent as you demonstrate synergy with the companies, the state-owned enterprises and the Telkom. But we also have 3 other external funds. So we invest in seed, Series A and Series B with checks as little as 500K. We still have that. So we're operating 4 funds together right now. I myself been a partner in Convergence Ventures before, since 2014. Maybe most of you know me on that hat. I've been working for the last 25 years to build the ecosystem of tech in Indonesia. So not had at this. So hopefully be able to build that ecosystem more with MDI. Thank you.
Great, thank you. I'm just sitting here jotting down notes furiously, feeling very excited and so lucky to have all of you on the panel. The wealth of experience and the diversity that you're bringing to the table from thinking through seed, early stage, late stage, the vertical expertise and what you've got to offer. I think our audience are in for the treat. And I keep hearing many of you referring to like, hey, it's COVID, but we're cutting more checks. So I think that might be surprising for many of our audience today. So I'd love just to get into the first question. As an active VC in Southeast Asia, how has all of this pandemic situation, some still unfolding, some is a little bit more under control across Southeast Asia, how has that impacted your approach to funding decision? What has changed and what stays the same? So maybe we'll start with Olivia.
Sure. So on the Phoebe side, we launched the fund in December 2019 and done our first investment in January this year. So I would say that we are kind of COVID native. So the change on our side are kind of minimal.
That's a new term, COVID native.
We kind of exclude a few categories, obviously, like travel and hospitality. We also make sure that the startup that we invested on board enough money to have at least 24, 30 month runway, ideally. And obviously we have to close some deals and do some due diligence remotely without really meeting in face-to-face the entrepreneurs. And obviously we all know let's say the pain and the strong impact of the pandemic on the ecosystem and on the economy and the health in general. But to give a bit of positive notes and let's see the bottle half full, we also know that the pandemic have a strong positive impact on the acceleration of the B2B digitalization. So it's good for the B2B startup. In the B2C, we also see some many trends and positive impact on online education, telemedicine, gaming, entertainment, e-commerce. For the entrepreneur, it's getting more and more capital efficient, I would say, because potentially there is less competition on Google, Facebook, so the bids are less expensive, the rental going down, potentially salary also. You have less competition by categories. On our side, I believe that we're seeing more deals at the venture level, because some employee and talents are fired from some big groups. They create startup. We're seeing much more and more bridge, or in some startup on board more money than they initially expected, so we can join some interesting round. I believe also there is less investors, some valuation going down. And finally, to end up on a positive note also, that even if all crises are totally different, but in 2008, during the last subprime and financial crisis, startup like Slack, Dropbox, Uber, Airbnb, Square were created. So it can also, 2020 can also be a great vintage for the entrepreneurs. And the one who are resilient, who will pass this pandemic, I believe they will get stronger and good position to capture the future growth.
Yeah, that's a saying, right? Don't waste a crisis.
Yes.
Why don't we hear from Yiping? Like, how has the pandemic impacted has it influenced how you're thinking about investment in the region, if at all?
Yep. I like that Olivia talked about COVID native. We are a March 2020 fund. It's definitely a pandemic fund. We believe that the best vintage is going to come out of these 3 years. So 2020, 21, and 22. These 3 years would be like the strongest kind of opportunity phase. So as with what Oliver said, I think that we see quite a number of startups that are that was initially I guess lower valuation for a while, but I think now we are beginning to see lots of good entrepreneurs, lots of COVID defying startups that are actually maintaining or even just pushing through with good valuations. So we feel like there is a huge tug of war going on with the valuation. So I feel like there's not a whole lot of change after the few months have equalized. In terms of how it has changed our perspectives of how we invest, what has not changed is that we still have the same, the way we look at the founders, the way we look at the matrix, the traction, everything still remains the same. Of course, due diligence still remains the same in terms of the data room, but definitely we can no longer meet. And it feels like VCs are actually very creative when it comes to Zoom calls and all. We now have back-to-back calls, way too much actually. So right now, all VCs get a lot more choices. We get to meet a lot more startups. We get to attend all demo days right now because now finally we don't have the travel. So in terms of that, I do feel like the back-to-back is helping accelerate more deals being done, more just for us to see more. And that I'm also beginning to witness a small trend here. I'm not sure if it's a trend that will stay, but more and more investors are also collaborating, sharing deals, checking out due diligence, reference check founders. So I'm also kind of noticing that, like I said, we believe that and health tech are going to produce some really big winners in the next decade as a result of today, what's happening. But we really, for us, we see that not much have changed surprisingly. Maybe what has changed is that if VC funds want to raise the next huge big round, we can't travel, and that's quite a bummer. But on the startup side, I think most of us are pretty big risk taker, and we're doing early stage. And early stage really, physical is just one piece, right, of the due diligence. There's so many other things we can do due diligence on. Yeah, so that part hasn't changed.
Got it. Thank you, Yiping. Jeffrey, what about you? How has all of this pandemic situation influenced how your VC invest?
I think the first 3 months was kind of housekeeping. So everyone's kind of like, heads down. I think May onwards, the head started to lift up. And then July onwards, the money started pouring back in. So there are, there are investment terms that are much better now. And then, but then the hottest deals still, is actually back to the pre-COVID kind of numbers. But we see a lot of flat rounds, down rounds, etc. But that's the way it is for this year. Other than that, yeah, the general kind of a little bit more conservative in terms of cash requirements, in terms of how much money do you need to get over a certain period of time. So all these are a little bit more stringent, I think. Other than that, smaller checks or earlier rounds are faster to close, and then the bigger rounds, when the lead investor cannot fly to see the team, that will take a bit of time to close. But because of that COVID native kind of feeling, people already know that they cannot fly anyway. So if I want to do a deal, I might as well just do the deal. So they are trying to do their absolute best to get their work done. So things are speeding up since July. Yeah.
Got it. And Samia, what about from Insignia point of view? How has this impacted how you go about making investment in the region?
Yeah, now that it become a thing, I'll use Olivier's expression, which is COVID native. So essentially, yeah, our fund too, as I was saying, we just started investing in the middle of this. So our first investment was made in February. So really right in the middle of this. What I feel is that our top of the funnel has accelerated simply because of the fact that we can see so many entrepreneurs at once. We just need to hop on Zoom, and we don't need to fly over to so-and-so country to meet them. But we've been slow in executing because given our check size, I think it's always better for us to meet the team. We are still closing deals despite the fact that we hadn't had a chance to meet the entrepreneurs face to face, but that the bottom of the funnel work is taking more time, and we are indeed relying on local VCs if it happens that the investment is outside of Singapore to give us a hand on local due diligence, and so that was a big thing. I think the other thing is, of course, certain verticals we've seen it in our portfolio have benefited from the crisis to an extent, right? We all know that education and healthcare have been net positive on this one. Some have suffered as well, and we had a pretty broad portfolio, so we wanted to make sure that everyone in our portfolio was, first of all, safe and sound, and they had at least, 12 or 18 months of runway ahead of them. And if not, we wanted to make sure that we had the right things in place to shore them up. So as Jeffrey was saying, the first few months were really inward looking and make sure that everybody was doing well. And then we started looking outside after that, once we felt confident that our portfolio could weather the crisis. So yeah.
Got it. Thank you. Now let's move over to Jono, and I love the batik, by the way. Indonesia represent. Indonesia is still very much in the thick of COVID. So as some other countries in Southeast Asia are recovering and on that recovery path, Indonesia is still in the middle. So from your perspective, I mean, it will get better. It will get better. Protests will get better too. And but from where you sit and with that telco relationship as well and the government relation, I think you have a unique point of view that you can also share with us on how all of this influence your investment decision, your investment strategy.
Yeah, COVID has been as you said, we definitely do not want to miss an opportunity to use a great crisis. And I think Indonesia have dodged it pretty well, in the sense that despite the fact that we are pretty bad at it, we are not as bad as a lot of other countries. It's just maybe we have a bit we have enough immunity before to weather this thing naturally, despite our horrible effort at it. I shouldn't have said that actually. But we are in a sense MDI 500 is COVID native, definitely. And we have adapted our strategy as well that way. So we have focused on our deployment, especially on the MDI 500, to use COVID to see which startups can ride it. Right, it's a great filter. Right, which one can adapt, which one can survive despite, which one can pare down and make a good business, even though they're growing, right? And there are quite a lot of them who are growing by leaps and bounds. Logistic is doing a killing at this moment, right? So we adapted our fund to be that way. In this situation, there have been a few opportunities where we basically bridge a good company growing, right? And we basically, or even they have not quite demonstrated their ability, but they're about at the crux of it. And we said, okay, don't worry about it. We'll drop in a couple of million, right? And we agreed that the next valuation will come at this kind of multiple, right? And your next $30 million checks, you're assured. You can get that there in 6 months. We'll drop you the money in 6 months, right? So they can skip the song and dance for their Series B or Series C, and we can lead the round. And we are also very friendly to all the other VCs. We definitely need their support and their eyes and ears on the ground. They've been guiding these startups before, and we make room for them to participate, continue, right? And we also want to make sure that I check around with my fellow VCs, right? We make sure that we get the right valuation so that everybody's happy around the table. Yet we give in fundraising takes so much time from our startup, right? So if they can demonstrate their growth, they should not need to do this a lot of this song and dance. And the fact is that there's still a lot of us around the table, right? They're still very confident in this region. We don't need to go very far to investors that do not understand the value and where we are all in Southeast Asia. The momentum we have over here. We have enough money in here to continue to support our startups, as well as the government have seen startup in a very positive light, especially leading toward COVID. Right? We are given this mandate. Late last year, early this year, and then COVID hits, and then suddenly, a lot of the initiatives are in the government are related to around how to use tech to help the people during this time. So we are also one of those startups. I always consider VC a startup that have successfully navigated this storm and actually do much better where we are at. So that's where we are right now. We'd like to support more and more companies, and I'm also in a. I think the growth fund is in a better position because we definitely can do the strategies I have, which means we can pick and choose the companies that have survived. Right? I do not envy you who have to do it for early stage. That is a much harder job at this moment. I get the easy job of helping the proven ones continue to grow.
I think there's just within this, we're hearing a lot of the very common theme from, hey, this is actually a great time to invest because you get more for your bucks from VC. That's a common theme on the valuation. Another common theme that I hear is, wow, everyone continue to invest, we're getting a little bit more disciplined when we think about where to invest and how to evaluate to make sure that the money goes to the right place. It's almost the survival of the fittest on picking out which company with great ideas that will ride the wave. I also hear a lot of the common verticals that come out stronger, from education, from health tech, finance, and I think these are some of the areas that you mentioned. So new vertical and overcoming not being able to see the founders or their team in person. In a way, it slows down some and speed up others with being able to just stack up a lot of meetings and run through that faster and being able to do due diligence through teleconference and all of the remote means. So I think it's quite interesting just to hear that there's a lot of common patterns that we see from the panel. What I like to go next is we touched on this briefly on how do you think about how has COVID influenced your investment strategy? If we were to shift gear and think about when you evaluate a company to invest in, a startup to invest in, what are some of the considerations, especially during this time? We heard about being maybe a little bit more stringent in due diligence, looking at founders. Yiping, you said that's something that stays the same. I'd love just to go around and just hear about, given that most of our audience are from startups, and I think this would help them tremendously, just to understand what type of criteria, what do you look for to say, hey, you know what, that's a golden goose that will lay some golden eggs. So maybe we'll reverse the order and start with Donald and then go up.
Yes. Okay. The way we look at startups, I think again, I have a lucky job of being able to be at a stage where, in most cases, in Series B and above, we look for companies who have already shown that they can have a proper business model, right? And their margins, we look at their margin, we look at their contributing margin 1, 2, and 3, how they're doing, and we can and there's no excuse when you're in B if you don't have that, right? So so
a line of sight to generating revenue.
Yes, I'll definitely line of sight during the revenue, an awareness of the numbers, right? As a founder, especially if you are to navigate COVID, you need to be aware of which part of your business works and which part doesn't, right? And we look at the founder and how they create their business plan, how they evaluate what they do better at and what they do worse at. And if they don't know their numbers, then they're just lucky. And that's very dangerous if you just get here by being lucky. You have to be good, right? So that's what we expect, that you have the awareness and a plan, and you have be able to execute that plan successfully, or you have adjusted your plan successfully, right? And then we will invest. So yeah.
Got it. Thank you. So that strength, the understanding of the metrics and plan to generate revenue. So that's what you're looking for. Thank you.
For mature companies, right?
Yes. Yes. Samir, what about at Insignia? What do you look for?
Yeah, so we don't have, most of the time we don't have the luxury of numbers or strong data. So sometimes it does happen when we invest at a later stage. I should mention that we also have an opportunity fund vehicle where we can make later stage investments, but our bread and butter is very much early stage. And the way I like to present it, because I guess this question comes quite often, is we look at two things, the wedge and the vision. So the wedge is, are you able to build a product that addresses a very narrow, acute problem for your consumers, for your enterprises, for your users? And then are you able to build momentum on the back of that very narrow wedge, right? And then the vision is essentially, how does the long-term product vision of that wedge look like, right? So how do you start from that very, very narrow problem set, and then how do you expand into a much wider set of solutions for your clients, right? So how do you bring value first, and then how do you build value on top of that? And to touch upon the numbers, I feel like a lot of startups, and again, being a founder myself in the past, we were playing the same game, is essentially looking at an iceberg and looking and seeing that iceberg rise above the water, and that iceberg is your P&L. So at first, you just are able to see your top line, which is your revenue. That's positive. And then as you grow, more and more of your P&L becomes positive and becomes clear to you. So to Donat's point, you start seeing your gross margin, your contribution margin 1, 2, and 3, and then hopefully at some point you get to net profitability, right? Which is the way any business should be running, logically speaking.
Got it. But that's starting from that early stage of being clear on the value add that you're bringing to the user, that uniqueness that you're bringing to the table.
Mm-hmm.
That's a great tip. Thank you. What about you, Jeffrey?
For me, quite straightforward. Market size is first. Second is the team and culture of the team. And then the last will be moats, right? How differentiated they are with everybody else.
So the addressable market, the team, and then are they standing out from the crowd?
Yeah.
Short and sweet. Yiping?
We kind of split this, or at least I try to split this according to like the stage of the startup that we're looking at. Typically, we think that at seed stage, the founder plays a very important role in a way of background, resilience. Are they a hustler? The speed of growth in the kind of area of business that they're working on, and also definitely on the differentiation. So I think at the seed stage, a lot of it is about the founders and then the product, right? And then related to what Jeffrey said about the addressable market of that product. So maybe seed is still in order of that for us. And then when it comes to A stage, we start to really be able to see more traction. Then traction becomes super important, like addressable market, traction, founders, timing, all this kind of come into play, and we have to weigh all this. I wouldn't say if it is very specific, is it really the founders that will stand out, or is it the addressable market, or is it the traction that will stand out? I think all this have to be put into in comparison to what else we can look at. So we tend to also think that if we can put 1 million check size in this company, can this 1 million check size have a stronger impact to propel a company in another company B with, let's say, faster growth or even stronger founders or a bigger addressable market? So we tend to do a little bit of a compare and contrast too.
Got it. So a lot of that, given that it's early stage, so big focus on founder, unique idea. Got it. And last but not least, Olivia, what do you look for?
Yeah, so fully agree about the team, company culture, large addressable market, traction, unit economics, defendability, scalability. We're all looking at the same stuff, obviously. But let's say as we focus on seed, let's do a deep dive at the founder and the team level, because obviously you can pivot the business model, but you can. It's pretty hard to change the people, at least. So we like to work with very transparent and ethic people. We want to be able to build the trust with them in a very short period of time. That's fundamental for us. We like to see passionate people, not people driven by the outcome, by the money, but people who love the problem they're solving, the industry, and have a deep understanding of the problem. Obviously, the execution skill, how fast they move, ideally process-driven, data-driven. Also with a pretty good self-awareness, in order they either learn fast or able to understand the gaps and recruit some experts to fill the problem. Having a long-term vision and ability to sell the dream and have a nice storytelling to recruit people, to do PR, to talk with suppliers and customers, and also management skills and capability to build a strong company culture. So that's the type of characteristic that we look at the early stage when we invest at the PowerPoint level. That's definitely the top 5 or 6 criteria that we're looking at.
So the business and a heavy focus on the human capital.
Exactly.
Great. I think time just flies, and I was just enjoying myself so much, and I just realized that we're almost out of time, and we have questions from our audience. So I will shift gear and go to our audience question. So we have a question from and I apologize if I don't read your name correctly. I have a question from Nahini Gopal. And this direct to the trend that all of you have touched on around wellness and telemedicine and health tech. So the question is, are there any COVID-19 behavior change trends of wellness, remote health, and self-care apps that you have noticed during this time? I will direct this question to Donald first. Donald, could you share what your thoughts are on this topic?
Yes, yeah, definitely. We have seen a significant pickup, especially in March of 2020, an interest in telemedicine and getting information about COVID. In many places around the world, that interest died down by May, back to normal. But in Indonesia, we see it comes down to a new normal, right? We have seen a number that goes up 3 times and come back down half to a very good new normal. The problem with some of the healthcare outside of there is that the play there's not enough strong use for monetization or strong case for monetization. So a lot of the healthcare are actually burning money, right? And that's actually how we're trying to change that. The good news is we are working with the government of Indonesia. They have a need to be able to reach out, and what we are strategizing right now is to work with the people who are actually going to pay for this health, the Medicare and the insurance company, which we are the core of. It's the Indonesian government, thankfully in Indonesia, and we're working with that to give access to that to the startup players. So hopefully, if this is successful, it will be very easy for Indonesian startup to get paid on healthcare. That's actually what my task is for the next end of the year.
Got it. Another question that we have is from Kevin, and this is directed to gaming vertical. Many of you have mentioned that entertainment has accelerated and gaming has accelerated as people are stuck at home. They have nothing better to do than play games. So we've seen this vertical, which is already a massive vertical, but skyrocketed. So what do you look for to make investment into gaming company? Is it a user base? Is it a size? Is it the cash flow? Any tips that anyone can give? And maybe, does anyone have a keen interest on gaming? I think, Olivia, you're mentioning about entertainment earlier. Maybe I'll move this to you.
No, we haven't done any deal in gaming, so I cannot really help here. I mean, I know well the Play Venture guy in Singapore. They only do gaming, so you should definitely talk to them.
Yeah, we have a few gaming portfolio. It's doing incredibly well, 2-3x growth year on year, and we are, of course, Telkom is the second largest game publisher in Indonesia. So we, of course, have created the bridge between them, and at the beginning of this year, they're starting to be able to promote their games as well as get paid. Telco is the best in terms of bill collection. in Indonesia, Indonesian cash-based society. So that is a good way to do a win-win situation in that. A little bit of work we need to do to convince the telco people that gaming is the demand and it's something that we need to serve as opposed to trying to force feed education and something more useful, right? But so we have that a bit of a problem with that, but I think we sorted out.
Got it.
So, yeah, gaming they grow in growing.
We have another question from our audience, Herman Toh, and this is about social commerce. I think this is a trend that we begin to see a lot in India. We see Indian startup coming to Southeast Asia, expanding their company. Yiping, I know you have a few companies in your portfolio, Style Theory, Shopback, and all of those. What do you think of those trends on social commerce, and do you think we're going to see that in Southeast Asia?
Yeah, social commerce is definitely heating up in the whole of Southeast Asia. We just in the last month, I think we talked to more than like 5 to 7 social commerce startups. They sell anywhere from vegetable produce to groceries to beauty products. The growth is actually phenomenal. It is quite interesting that, I mean, I understand groceries because it's essentials, but the beauty commerce ones are like skyrocketing.
It's essential for women, even in lockdown.
So it's anti-gravity in that sense. We believe that the social commerce space, although it's already kind of there is a small few years in Southeast Asia right now, it is still very nascent, and there is no like one key or 2 key players. Everyone is still kind of coming in and trying to compete. We believe that we're gonna see some stronger winners in the next few years. And also interestingly, we have invested in an influencer marketing platform, right, called Party Post, and they work with many of these social commerce startups. They're seeing huge demand uptake in influencer campaigns on top of their regular bread and butter in brands. So we also see that brands are coming back now after some of this little bit of a stabilization in COVID. That some of the advertising dollars are also coming back. So we're seeing that there is that trend now. We are bullish on social commerce. To be honest, we don't know which one to bet on yet. And I think the ones that we would like very much to bet on would be the founders who think about how to also not just use social media, Facebook, i.e. Facebook, as just the main way to acquire users, and how else, right, to get your customers, your users to be more sticky. So still early, and welcome.
Early but excited.
Yeah, and welcome startups in the social commerce space to come speak to us.
Got it. And I have one last question before we wrap up on the panel. And I will direct this question to maybe Samia and Jeffrey. You spoke about the founders and looking at the people. I have a question from Timothy, who asked, what make you excited and what make you want to lead around? Especially when you think about startup bringing in new ideas, gaining traction, but it's new in the market. So what get you very excited to lead around? Jeffrey, would you like to go first, and then we'll go over to Samia?
Sure. I think to lead around, the firm needs to kind of be to have high conviction on the deal, right, on the market, on the team, etc. And then at least one partner will be kind of like working closely with the founders. So I think the first one will be chemistry with the founders. So if we have strong chemistry, and we can be very
can you
helpful.
help us decode what is good chemistry?
It's actually difficult. So for example, I think many of you don't know that we invest as a firm. We don't invest as a partner to a deal. So the entire firm needs to like the deal, but sometimes the chemistry may be better with some other people. So for example, I may have met the deal, but then another partner in my firm is actually have much better chemistry with the founder. So chemistry is more towards high level discussions, ability to listen, ability to create banter, ability to be stubborn but listen at the same time. So there's a good flow, a good exchange of ideas, and that's just one part, right? The other part is like we can actually help. We know that we can be much more helpful than anybody else on the cap table, so that we can push you further, right? And then the next round guys may be able to take it over. So I think these are the top two reasons.
Got it. Thank you. And Samia, anything that you want to add?
Couldn't agree more. I think Timothy has also a question around doing something unfamiliar. I think we're all in the business of investing in unfamiliar stuff. There are some of us that would always look for a comparable out there, either in China, or India, or US, to validate the model. It's not necessarily the case, I would say. I think more and more, I think if anything, COVID-19 has validated the fact that Southeast Asia has its own issues to solve with tech. So we are not necessarily looking for a model out there. And so even if it's unfamiliar, we are actually quite happy to look at it. And so we need conviction on the team. We need to make sure that they are the right people to solve the problem.
Got it. Thank you. Thanks so much for spending your afternoon with us. I learned so much and thoroughly enjoy our conversation. I'm going to start using the term COVID native. It seems like it's a thing. Everyone's just like, yes, COVID native now. We're well adjusted. Southeast Asia is very resilient. And it's exciting to hear that all of the VCs that join us today are excited about the future of the region. And this is a chance that it's a test for the founders. It's a test for the startup to bring ideas to the table, to demonstrate their capability from, hitting the right chemistry with the right kind of capability, line of sight to generate revenue, knowing their metrics. And we've also spoke about looking at acceleration of technology into other verticals that bring opportunity into the region. And you're all excited to be part of that journey. So I couldn't be happier to have the opportunity to host all of you today. Thank you so much. With that, I'm going to turn the mic over to Daniel to help us wrap up. Thank you.
Oh my God, what I can say is such an amazing and eye-opener session. We have learned a lot of insight from our venture capital speakers and also their belief in the growth of the startup ecosystem in Southeast Asia. Once again, thank you our speakers and also big thanks to our audience who stayed with us until now. Just a reminder for you to fill in the survey, the feedback form on the right-hand side, or you can scan the QR code if you are using the mobile phone, so that you can fill in the feedback form and then you will be eligible to win the prize. Okay, so we will announce the winner of our quiz after you fill in the feedback form by email. And then you can leave the contact in the feedback form also. Our Google team will follow up with you to help with our latest technology if you need, and also to help you connect to the relevant technology or relevant VC if you need our introductions. Okay, so without further ado, I would like to say thank you again to all of the audience, and I hope to see you again in our future event. Yep, all the best and goodbye from Google. Thank you.